Good afternoon, everyone. This is Henry, and as we take a look at the SPX today, down 1.6% as bears continue to really sink their teeth into this market and leaving with a very interesting close. You know, a close where this action below 5,900 really does open up the door to more downside targets. So the thing that I think about when you get into these situations is that quoting more and more levels of support is not always super helpful. You know, at some point one of them will hold, but usually looking at sentiment can be more helpful. And the two measures of sentiment that I like to use are the put-call ratio and a measure of the VIX. So let's look at both of these here real quick. The idea in the put-call ratio, I like using the symbol here, $P-call in Thinkorswim. And I'll leave it to you if you want to go back and look at the comparison of these dates, but you can really see the action just in this ratio itself. That is to say that when the put-call ratio gets above 1.0, that the market is then bearish enough that it can bottom, right? Things will look very bearish, and there will be so many participants that are leaning on the bearish side that the market tends to be a little bit more bottoming. So here's one instance of that. Again, you can see that when it gets extreme, it goes right back to the other end of the spectrum. So panic to the downside and then panic to the upside as it rips back up. So again, go back and compare this date, go back and compare this reading that we saw at the beginning of February, and then think about what we need to see that happen again, right? 5,900 could turn into 5,800 pretty quick. And if that was the price point that then triggered this reading to be above 1.0, well, then we can start looking for a market that is ready to buy into March. So that's one metric to use, and then the other is the VIX. I like looking at the VIX on a daily chart with the Bollinger Bands and looking for two closes above that level to think a reversion to the mean is due. That is all to say. And again, you got to be a little careful with it, right? It's just one thing to follow, but we saw where the VIX closed well above that Bollinger Band today. Tomorrow, you get a close up here around 23, 24. Sure, it could lead to a Black Monday and something that's a much bigger correction in stocks, VIX getting above 28. But most of the time, those two closes above are where I think things are getting a little frothy. Premiums are usually a little bit high, and that coinciding with those other signals can try to help you find good spots to find a little something to buy. So I hope that's helpful. Promises to not be dull tomorrow. We'll see how it looks in the options room then. So y'all have a great night and hope to see you tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.